A to bank B, if in a wallet there was an easy way to track, it's just an inter-wallet and not really a transaction where not really an external transaction where it left that particular wallet and hit the exchange. I think that would be another very important information to see. If it's just an inter-wallet, it really did not trigger any kind of taxable or accounting event. It's just happened within the same company. So those are a couple of things that would love to see in wallets today. And so back on the whole tracking, there are a few softwares today. Verity is one of the softwares that helps facilitate, automate some of these transactions and obviously helps for accounting and tax reporting purposes. And there are a few others. But then again, the pain of manually reconciling that does not necessarily go away because you still got to tweak that information to some extent. And then to add to that complexity, if your cryptocurrency had a fork, well, now you got to track that fork. For example, Bitcoin had, I don't know, more than 70 forks today. Not all of them are worth significant amount, but some of them are. At the point, the question arises that when a fork happens, what triggering event does it create for tax purposes or accounting purposes, and what would be the value, right? So say, for example, in August of 17, I believe, when Bitcoin forked into Cash, as of that point, what was the value of Bitcoin Cash? Most likely zero when the fork happened. So for tax purposes, a position could be taken that the basis of the forked coin is most likely zero. And when now you, at any other future given point, you transact in that Bitcoin Cash, whether you pay Bitcoin Cash to an external party or you're selling your Bitcoin Cash, the difference between that basis and the sold amount is really, you got to pick that up as your gain or loss. In this case, for a forked coin, most likely you have a gain if your basis is zero. The other thing to keep in mind is anytime, so for tax purposes, even if you're paying a cryptocurrency to an employee or if you're paying cryptocurrency to a vendor, just because it's cryptocurrency does not mean that it's not creating any triggering event for tax purposes. Like IRS today does not recognize cryptocurrency as a fiat, obviously. You pretty much got to convert the transaction, the cryptocurrency as of the point in that transaction in a dollar equivalent value and report that. So if you are paying Bitcoin to a vendor, well, that's a business expense from the payee standpoint, and the value at which that transaction happened, that's got to be recorded as your expense. And for the other side, for the recipient side, it's an income. So that's one of the other things that kind of companies need to keep in mind, that just because you are paying in crypto does not mean that you kind of navigate around the U.S. It's exactly the same thing as though you're doing the transaction in fiat. The other couple other considerations that are happening today is airdrops, for example. If a company is airdropping X number of, say, lumens, more for a marketing purpose, all they want to do is get their brand name out there. They decided that we are going to transfer, say, 1 million lumens to everyone who has Bitcoins in this particular exchange. Say, for example, if that transaction happens, something of that sort. That lumen that was given away by this particular company, how should that be treated for tax and accounting purpose? Just because it was a free giveaway does not mean that it didn't create any kind of triggering event. It's more or less a marketing expense for that particular company. The question then arises, what's the value of that particular crypto? In this case, a token. Lumen is, the crypto or token. What's the value, and at what value does that need to get recorded as an expense or income? And then when you talk about valuation, a lot more considerations. If it's valuing something like a Bitcoin or Ether, that's obviously out there and in multiple exchanges. It's not too difficult. You could, as long as you're using a consistent approach of valuing the crypto, you could be fine, like average of couple reliable exchanges. That would be an appropriate method, as long as you're consistently using the same method. But if you get into issues where you have to now value a token, where, for example, a company raised, issued bunch of tokens in an ICO or STO. Well, how do you value those tokens if those tokens are maybe thinly traded on an exchange, or maybe not even traded on an exchange yet? It's probably a pre-ICO stage. How do you value that token? But those are the factors that need to be considered when you are dealing in any kind of crypto or token transaction. I'm going to stop here for a couple of seconds and see if anyone has any questions before I move forward. Anything good? Okay, go ahead.
What's the most recent IRS guidance document that's officially been published? I think it's 2014. Is that the most recent one?
Officially, yes. I am not aware of anything specific to crypto that's been there outside of that. I know they have been working on a few things, but I don't think there's anything official. Matthew, any ideas?
Just the like-kind exchange clarification.
Yeah.
On when the tax reform came
So
out.
so effective one, within.
We're all using whole patterns.
Yeah.
So,
If you just clarify that you can't do like-kind exchange.
So the 1031s don't apply at all. That's really the only.
That was well, some people call it update, some people call it clarification.
yeah. Well, so indirectly, before the new tax reform, IRS said nothing about cryptocurrency and like-kind exchange even kind of falling in that bucket. But indirectly, they came out with a new tax reform saying that you cannot do it. So go ahead.
Would, being a big accounting firm, wouldn't companies that are doing international business kind of see the benefit of not using banks to move their money around the world? Or are you guys not seeing that yet?
From like cross-border payments?
Well, yeah, I mean, if they got operations in multiple countries and paying vendors around the world, wouldn't they want resolution on all this so that they can?
Yeah. I mean, that's happening. Like BitPay, for example, has been, this is like one of the major things that they are trying to solve, cross-border payments. The problem is that regulatory bodies today are so behind in everything that we just cannot do anything to expedite that process. It's just the nature of it.
Okay, so if Bob's Manufacturing in Atlanta has an operation in Sao Paulo, and they're getting charged thousands of dollars per year to move money back and forth, can Bob's Manufacturing open a crypto exchange account?
They can definitely transfer payment using someone like a payment processing company like BitPay to pay in Bitcoin. Yeah, they could do that.
But are they?
We are seeing companies do that, yeah.
And one of the major bill pay vendors, Deep, uses Bitcoin as the rails for international payments. So they use that. So BitPay is more like a merchant processor, like a credit card processor, but Veeam is more like a bill pay facilitator. And if it's more efficient to use cryptocurrency for that, but you need them to get sterling pounds, they do that behind the scenes. So there are companies coming into the market to facilitate that.
Yeah, and all of these, they have we would hope they have proper protocols in place to do KYC and AML. So you want to use a company that follows through these minimum required regulations. And then obviously then you have all the FBAR and other reporting. One of the other things, if you have cryptocurrency, just like US dollar today, if you have a cryptocurrency in any foreign exchange, for example, and if it exceeds a $10,000 limit, you're expected to file FBAR report, just like what you would do for a legal denominated fiat. Very similar regulation or rule would apply even for cryptocurrency today. Right, I got 5 more minutes, but I really think these are some of the top consideration, mainly from accounting and tax standpoint. Again, as I said, like not a whole lot of regulations out there. The other thing that we are seeing, and it's more on the smart contract side, switching more towards enterprise companies that are using hyperledgers and the quorums of the world. One of the things that we are seeing as an issue is as companies continue to use or start using more smart contracts, the question becomes, how are those smart contracts functioning? Is there, are we going to be able to get that level of reliability and comfort on a smart contract from an input and an output standpoint? Like, say, for example, I might be able to see a report that's coming out from a smart contract, but my concern is more on more on what got fed into the smart contract from a coding standpoint that could impact the output to some extent. So, is my output even reliable? The set of codes that made the smart contract may not necessarily be in compliance with the company's business model, or there could be something in the code that could raise another risk barrier altogether. So that's one of the other issues we are seeing, where now it's not just kind of looking at it's not just looking at what's the output of whatever is coming out from the blockchain application, but kind of more into the coding aspect of it and following and understanding that code. So if you're a business using smart contract or facilitating smart contract for any transaction, ideally you want to make sure that there's some sort of audit done at the coding level, not just the programming code, but also kind of to make sure that legally it's in compliance, from an accounting and tax standpoint and a business standpoint, your smart contract is really doing what it's supposed to do. And I think with that, my time is very close to being up. All right, well then, thank you so much.